Everyone saw how the Bank of Canada held interest rates last week, but barely anyone has talked about how they're finally saying out loud in the public what many of us have seen coming for a while now. You see, the governor of the Bank of Canada gave a speech following this interest rate announcement where he revealed how he actually thinks that one specific wage-suppressing policy is actually a good thing. Now, I don't know if this was a slip up or if these high ups in our country are becoming more comfortable with blatantly saying these types of things, but I found this and a couple of other clips really revealing, and I'm going to show them to you. And in order to understand this, you first need to understand what are the Bank of Canada's goals and incentives so that you can see how they might differ from those of the average Canadian. Once you understand this, and it's super simple, everything's going to make a lot more sense.
We want strong, sustainable growth and a healthy labor market. The best contribution we can make to these objectives is to deliver low, stable, and predictable inflation. Price stability is a cornerstone of a market-based economy. Nothing works well without it.
So their primary goal is to keep inflation low, right? It's actually in their mandate that they have to target a 2% inflation rate, but they can be okay with it anywhere between 1% to 3%, and they call that the acceptable band for inflation. And that's exactly why they hiked interest rates so hard, to make it more expensive to borrow money, suppressing asset prices, and making Canadians feel poorer. Now, this results in less spending, meaning less demand for goods and services, and as a result, because of that supply and demand change, the inflation rate should reduce. But the Bank of Canada is absolutely terrified about one thing and one thing only, and that's inflation coming back despite the fact that they've raised rates so drastically. And that's for sort of two reasons. If people don't trust the Bank of Canada to get inflation under control and get rid of it, well then it then becomes harder to get rid of inflation. Because people think, well, if there's going to be inflation, I better buy the things I want to buy today because prices are just going to go up in the future. Now that thinking causes people to spend more today, bumping up demand, and it sort of becomes like a self-fulfilling prophecy, right? They call this entrenched inflation expectations in Bank of Canada speak. And they say if this happens, well, they're really going to have to bring down the hammer. It's going to be a lot more painful for Canadians because they'll have to raise rates even further, even more dramatically to finally squash inflation despite these entrenched inflation expectations if this happens. Now, it's this fear that actually puts the Bank of Canada kind of in backwards land, where more jobs for Canadians and economic growth is actually kind of a bad thing in their eyes. Listen to this clip where Macklem says it's a good thing that it's harder for unemployed Canadians to find jobs, and then I'll break it down.
Employment growth has still been certainly positive. Employment's still been growing, but it's been growing less than population growth. So what that suggests is that the sort of supply of workers is growing more than the demand for workers. So supply is catching up with demand, and those pressures are easing. So we expect to see continuation of that trend.
He says that while the amount of jobs available in Canada is growing, we don't really need to worry about that being inflationary because our population is growing faster than the amount of jobs. Wait a minute, what? Does that make sense? Now, let me break it down a little bit further. Let's look at it this way. When the Bank of Canada looks at the labor market, like the jobs that you can get and the amount of people to fill those jobs, they look at it kind of like a supply and demand system, just like they look at the costs of goods and services and how that impacts the way that those prices change. In their eyes, when new jobs are created, well, that means there's more demand for labor. They need more people to fill those jobs. Now, if there aren't enough people to fill those jobs, then businesses have to increase wages to incentivize people to come work for them instead of a different business. Now, the Bank of Canada sees this process as inflationary, something that adds to inflation, right? Because they think, okay, if businesses have to pay workers more, well, then they'll pass on those costs to their customers, and the cost of the goods or services that the business produces, well, those will go up, and so too will inflation. But in this clip, he says, don't worry about that potential inflationary pressure because since we're increasing the population so much, that's not really a problem. Newcomers fill the jobs and suppress wage increases, and so we don't have that positive impact on inflation. To me, it feels like he's finally saying the quiet part out loud, right? Governments, we've talked about this on the channel before, but they feel handcuffed to raise immigration levels dramatically so that we can increase the working age population to tax them to then support our growingly expensive social programs as we have an aging population, and also to pay into unsustainable pension funds. These are all things that happen when the amount of Canadians in the country increases, right? But on top of that, there's this additional upside from the Bank of Canada's perspective. It reduces labor shortages, keeping wages down, and in their eyes, reduces the chance that their biggest fear will happen, which is increased inflation over the long term. But there's another benefit that we haven't talked about yet, and this next clip absolutely blows my mind, and I get pretty frustrated about it. Listen to this clip where Macklem talks about the only way Canada has been able to successfully grow the economy, and the other way of growing an economy that we're just not all that good at.
One of the things we talk about a lot is our lack of productivity, economic output per capita, and we rank at the bottom on a per capita basis in terms of output per GDP per capita. So
let me start with on a brighter spot, and then I'll come back to productivity.
Okay.
I mean, what are our big strengths? I think it starts with people. We're very good at growing our economy by adding people. We have a very well-educated workforce. We have high rates of labor force participation in this country. If you look at female participation in Canada, it's well above what it is in the United States. We are an attractive place for immigrants globally. We do a good job of integrating newcomers to Canada into our economy. Our Achilles heel. Our Achilles heel is productivity. We're really good at growing by adding workers. We're not very good at increasing the output per worker or productivity.
He talks about the way that Canada is good at growing the Canadian economy and the way that we're bad at growing it. The good one, I think he made pretty clear there, we're great at adding a ton of people into the workforce, be it increasing the rate of women and typical caregivers, either women or men, and like having more families fully working, or tying it to new Canadians being added to the country through other means, right? We're great at adding people. It makes Canada's GDP go up. There's more consumers, more workers. It makes that number go up. Politicians feel good. It's what we've called on the channel before. We've called it human economic stimulus, and it is one hell of a drug. Where we're not good is productivity. This is the amount that each person contributes to that GDP number on a per person basis, right? And this happens by innovating, creating new businesses, leaning into new industries and new technology, and using that technology and those learnings to improve the way that we do things, right? That's how you grow the economy without relying on human stimulus. Unfortunately, that is what we're really bad at, and it's often tracked through a stat called GDP per capita or GDP per person, right? The average amount that each individual contributes to that big countrywide gross domestic product. And yeah, we're not doing too good on that track. From 2014 to 2019, Canada's GDP per capita growth was only at 0.5% per year. And since 2019, it's been the fifth weakest of all 38 OECD countries, and per capita GDP growth has even turned negative over the past year. Not only is this a measure of productivity, but it's a measure of the quality of life in Canada, the amount of income that the average Canadian has, and their ability to spend that on things that make their lives better. And even though right now Canadian GDP growth is around 1.1%, that doesn't mean that the GDP per capita is increasing, because population growth is around 3.1%. So when you take those two numbers into consideration, the real Canadian economy on a per person basis is shrinking by 2% year over year. And the projections don't look much prettier. In fact, they are even more shocking. From now until 2060, the projections say that Canada will be the worst performing advanced economy with the lowest growth in real GDP per capita. Remember, real GDP per capita is the best indicator we have of quality of life. And this is what really pisses me off, and allow me to go on a little bit of a rant here, because what is the point of an economy if it doesn't serve its people an increased quality of life, right? It pisses me off seeing politicians and central bankers and the country's elite saying, hey, look at us, we're doing well, our GDP number, that's increasing, while in the meantime, the GDP per capita, the average quality of life for a Canadian, is declining. It's like patting yourself on the back because the numbers that you people are looking at look good, even if the outcomes for the people you're supposed to be serving, well, those are actually in the shitter. It's the people managing these top institutions in the country that are so focused on models and numbers and hitting projections that they forget the entire freaking point of all of this. The entire point of government, the entire point of a central bank is to serve the people, right? That's supposed to be the idea. Maybe it's not anymore. Let me take a breath, because on top of all this, I think that another issue with our productivity is the fact that a lot of our capital, the dollars that we have, are tied up in real estate. And since that's been such a surefire return over the past decades, it's really diminished investment in business innovation and startups that have the potential of actually increasing productivity and increasing GDP per capita as a result. Because why take the risk in investing in these risky things, these new things, if there's such surefire gains in housing and even these days in bonds that are giving higher yields? Why go farther out on that risk curve if you can get an acceptable return just for doing these lower risk things, right? So, what happens next? Now, if the Bank of Canada is successful in keeping inflation down, they bring it down to around that 2% target, they'll have achieved their goal.
When inflation is stable around the 2% target, it removes the anxiety created by large swings in the cost of living. Price stability means households and businesses can plan and invest with confidence that their money will hold its value.
Like I said, if they reach that level of stability, they'll have achieved their goal, and they'll probably be thinking to themselves, even if we have to print hundreds of billions of dollars to stimulate the economy when it starts to break, like it did during COVID, well, eventually we'll get things back on track from our perspective. So maybe this whole thing worked, and maybe we do it again. But what about the perspective of an average Canadian, right? Getting back to 2% inflation after a period of 8+% inflation doesn't bring prices back down to where they were or where they should be, right? They just grow at a slower rate, still growing, but from a way higher starting point. And what about most Canadians who can barely save an emergency fund, let alone invest in any stocks and real estate? Well, the value of their dollars have been eaten away by the flooding of these new dollars into the Canadian financial system. And even worse, they didn't get to see the financial benefits of all of this new money flowing to pump stocks and pump real estate and pump other investments. All of these things that people who are wealthier definitely saw the positive benefit of. All of this to say that more and more so, I'm starting to feel like the institutions that govern our country have started to lose touch with their actual purpose. When you squint really, really hard, humans start to look like data points and statistics. And when you remove the human from the picture, as long as you can hit your data targets, well, then in your eyes, everything is A-okay. And I'm curious what you think about all of this. Have I missed something entirely? Am I way off base, or am I kind of onto something here? Let me know down in the comments. I read every single one, and subscribe to the channel if you haven't already done so. Only about 30% of the people that watch these videos are subscribed, and it's a huge help, and it's free and a simple click, so I'd appreciate it if you do that. But with all that said, thanks so much for watching, everybody. Really hope this video helped you out at least a little bit, and I'll see you next time.